Let me walk you through an entire accounting system process, front to back, from starting entries to posting to trial balance to financial statement and then to closing the books at year end. This is very similar to what you see in Chapter 4 of your handbook, uh, exercises like Sheila Consulting, Green Energy, etc. You have some entries that start a company. Okay, and we're going to go through, we're going to make up the entries, we're going to post them to the accounts. I've done a lot of this already in the interest of time. We're going to do an adjusting entry, we're going to post that. We will then do financial statements, and we will do some closing entries. Okay, and I'm going to do this in Excel. Um, and it'll be on D2L, and you could pull it up. There'll be a blank one. You could try it yourself. You could look at the solution, and I really think you can understand a lot from the entire system by working an example like this. Too often there's little pieces of it, and you don't see the whole thing. But let's walk through this. Let's do some entries, and we'll post, analyze, journalize, post, trial balance, financial statements, and closing entries. Okay, 15 students invest 1,000 each to start a company. So you have 15,000 in cash, and that credit is 15,000 of common stock. They pay a whole year's rent. This is a short year, 6 months. So there's $600 to rent expense. You're expensing it all at once, and you paid it, so it's a credit to cash. You bought furniture for $1,000 as a 10-year life. We'll need that later. So there's $1,000, and we'll credit AP. You bought it on account. You performed services for $2,200. $2,200 to AR because you billed that, and you recognize $2,200 in service revenue. You paid salaries of $1,500. Salaries expense, and you paid those, so that's a credit to cash. You collected that $2,200 that you billed earlier, so you have $2,200 in cash coming in, and you credit AR for $2,200. You then perform more services, and you billed $1,000. So bill AR, debit AR $1,000, credit service revenue $1,000. You purchase some supplies for $300. Now we're going to assume that you use them all in the year, so we're not putting them in inventory, just supplies expense. And you bought those on account, so $300 would go to AP. Last entry, you paid dividends of $150. So if you paid cash, that would be a credit to cash, and it would be a debit to dividends. So I've made my entries, and they balance. Now we'll post them. If you've got a lot of cash entries, which you usually do, you could do it one of two ways. You could go through and post every single thing, or you could go post all the cash at once. And by that I mean you've got a debit to cash of $150. Let's go down and pick out the other cash. You've got a credit to cash of $600. Here's another one. You've got another credit to cash of $1,500. Anything else? You've got a debit to cash of $2,200. You've got a last one. You've got a credit to cash of $150. Okay. Now you've done all the cash, and let's count up how many there are. There's 1, 2, 3, 4, 5, and I have 5 here. If you keep track of it that way, you shouldn't make a mistake. Or, like I said, you could just post every single line one at a time in sequence. Okay. Let's now go pick up all the entries that aren't cash. There's 1,500 to stockholders' equity, a credit. There's rent expense, a 600 debit. I have the cash already. There's furniture, 1,000. There's AP right here, 1,000. There's AR, 2,200. There's service revenue, 2,200 credit. Salary expense, 1,500 debit. You already have the cash. There's credit to AR of 2,200. There's a debit to AR of 1,000. There's a credit to service revenue of 1,000. There is a debit to supplies expense of 300. You see how I'm doing this? I just highlight the cell. There's a 300 AP, credit to AP, plus highlight the cell I want to copy, and I move it over that way. And I like doing this way because you see what I'm doing. You see how I'm posting to the various accounts. There's a debit to dividends of 1,500 and a credit to cash, but we did that already, okay? Looks like we posted everything, and if we didn't, we'll find out soon enough. Now, if we sum, when you have a lot of transactions, sum the debit side, add up the credit side, and then take the difference, and that's your balance in cash. Okay? Here, the rest you could just do in your head. Okay, there's 1,000, 22, 22. So there's only 1,000 left in that balance. 300. This, you can add these together or sum them. Okay, I've now got my account balances for every general ledger account. Now I'll post them into a trial balance and see if I balance. Furniture, AR, AP, oops, that's a credit. Common stock, that's a credit. Dividends, that's a debit. Retained earnings, nothing yet. Service revenue. And again, if you're doing this in pencil, you'd be ticking these off so you don't miss any. Supplies expense is a debit up here. Salaries is a debit, 1,500. Rent expense is a debit of 600. Where is that? That's here. Depreciation expense, nothing yet. And accumulated depreciation, nothing yet. Okay? Okay, now let's see. Okay, my trial balance, these are the sum. Okay? Now I'm going to do an adjusting entry. I just have one, but I could have easily just done the adjusting entry and put it down here, but what the point the authors are trying to make is that adjusting entries are internal. They're generated internally. You don't get a bill for depreciation. You don't get a bill telling you to expense a prepaid. You have to create those, okay? So we had this $1,000 in furniture has a 10-year life. 10-year life, that would be $100 of depreciation expense. So my adjusting entry is going to be 100 to depreciation expense and 100 to accumulated depreciation. So the only adjustments to my adjusted trial balance will be 100 to depreciation expense and a credit of 100 to accumulated depreciation. Okay, and that balances. That's a trial balance as well. So bringing these things over, adding the debits together and the credits together, I'm keeping this very simple so you could really see what's happening. Sometimes an amount would be adjusted here, in which case that balance would not be the same. No adjustments on these accounts. Okay, we now have depreciation expense, that's new. And we have accumulated depreciation credit, that's new. My adjusted trial balance balances, and this is the trial balance where we will go make up the statements. And it's simply a matter of pulling these numbers off and putting them into the proper place on the statements. It's that simple. Revenue is $3,200 off the adjusted trial balance. The expenses are salaries, rent, supplies, depreciation. Okay, net income would then be the revenue less all the expenses, 700. Okay, statement of retained earnings, there's no beginning balance to retained earnings. There's no beginning because we just started the company. So 0, 700 net income, subtract the dividends. If you want, you could just, if it's a negative number, just go negative instead of positive and pull the dividend number off. Go ahead and sum that statement and you get 550 in retained earnings. You'll use that in the balance sheet. Then just pull the balance sheet accounts off. There's the cash. I'm sorry. That belongs down here. That was the heading. Okay. AR. Furniture. Cumulative depreciation is negative. Furniture net is some of these two. So total assets would be the cash plus AR plus furniture net. Okay. Accounts payable would be, we only have one liability, and that's accounts payable here. So that's total liabilities. Equity, the common stock, pulling that. And again, you would check these off as you did them, so you wouldn't miss anything. But something as simple as this, we could pretty readily see it. And now we have a balance in retained earnings from our retained earnings statement of 550. Add those two together. Add that and our liabilities. And we get a balance sheet that balances assets, 16,850, equal liabilities and stockholders' equity, 16,850. So you have your statements. One more thing to close out the year. You need to do your closing entries. Okay. You now have your adjusted trial balance that gave you your financials. Okay. You're going to do your closing entries. What you're going to do, you need to close out dividends, your revenue and expense accounts, those need to be zero when we get over to here. Okay, what makes them zero? An amount in the opposite direction, right? Start with revenue. That has a credit balance of $3,200. I'm going to debit that $3,200. I'm going to credit income summary, which is a temporary account in itself. It's just used as a clearing account, and you'll see how that works. On the supply side, to zero out the expenses, I need to credit them. So I need to credit supplies, I need to credit salaries, I need to credit rent, I need to credit depreciation expense. If I add those up, that's $2,500. Remember our net income was $700? So my income summary has to be $2,500. I now have a credit going to income summary of 7. I have a debit going to income summary of 25. So income summary is sitting there with 700. Okay. To credit, to zero that out, put 700 and put 700 credit and retained earnings. That zeroes out income summary, which is why you never see it in a trial balance. And you're basically moving it over to retained earnings. Likewise, to close out the dividend account, you need to credit it $150. Okay, you'll have to debit retained earnings. Now, the 700 coming over increases retained earnings. The debit to retained earnings of 150 decreases it, but dividends decrease retained earnings. So the closing entries we're making, if you walk through those, we're closing the revenue account with a debit. We're closing the expense accounts with a credit. Okay. We're closing dividends with a credit, and we're putting a credit to retained earnings of 700, a credit of 700, 700 less 150, 550. We do that, and we basically have zeroed out all the temporary accounts. And everything has gone now, moved over to retained earnings. Your net income is 700, less the dividends you paid, 150. If you move these accounts over now, after adjustment, you only have permanent accounts. That was debit, credit, 0. This now has a balance of 550. This is zeroed out, this is zeroed out, this is zeroed out, this is zeroed out. You now have a new balance sheet account, accumulated depreciation. These are the accounts you go into next year with, your trial balance balances, and you have no temporary accounts, only balance sheet accounts. You've effectively taken your income statement and dividends and moved them to the balance sheet, and that's it. I hope that helps. I hope you'll play with this. There'll be a blank one, and there'll be this one that you'll have for a solution. This is the accounting system. If you can do this, you can take QuickBooks software or NetSuite, and if understanding this will allow you to create a set of books. If you have any questions, please let me know. This will be on D2L, and I think I will email you the link too. Thank you.